Hello guys, what's up? What's up? Welcome back to another. This won't be a live, a trading, a trading video. This will be more of a teaching, educational video. So, in this video, let's not waste too much time. Let's just get into the concepts. So, in this video, I'll be teaching you how I personally use Daye quarterly theory, how I club it with ICT concepts. So, because if you have seen Daye quarterly theory, so if you guys haven't heard of Daye, this is just to you know. So there's this channel. So there's only one video. You can just go through this video. It's like around 10 minutes long. So you'll get an idea of what it actually means. So you can, before you start watching this video, you can take a look at this one. I know most of you will find it difficult to understand what this means, what the video is trying to say. Just go through it a couple of times. If you can get a gist of what Dye theory is, well and good. Or else you can just watch my video. I'll like over the time, like on the live sessions, I'll be going through what I'm seeing, what I'm looking at. So you can try to uh, you can understand how it's done. So how I see it, if you don't get this quarterly theory, and moreover, Dai is starting with the mentorship program as well. So I think the registration closes on December 5th. So you can join the Twitter channel. So I think it's you once you go to the Twitter, you'll get the Telegram group link. So over there you can register. I think the registration closes on 5th, and the mentorship is supposedly it is supposed to start on Jan second week or Feb first week. I'm not sure. So you can join his mentorship as well. Or if you're like someone like me who has got a hang of how to use it and you're finding it profitable, then you can skip it and just continue using it the way you like if you're profitable, of course. So I'll just give you a gist. So what die actually means. So I'll just show you a photo, like a picture. I've noted it down. So So in what die, if you go through that video, you'll get an idea. So I'll just explain it to you in a short way, in a short way possible. So according to die, every what do you call every month, every week, every day, every session is like a is divided by the count of four. So let's say if you go with the yearly, let's say if you want to go with the yearly thing, so the year is divided into four quarters, right? So it's from Jan is the first quarter, April is the second quarter, July is the third quarter, and October will be the fourth quarter. So, according to him, every year is divided into the quarterly theory comes into play from the time span of a year basis, and it goes on to the month as well. So, every month has 4 weeks: week one, week two, week three, week four. Okay, and every week has 5 days, but as per day, you can skip Friday. Okay, if it's not volatile or anything, you can skip it. So even ICT says like the majority of your moves should happen by Thursday. So Friday is mostly going to be a TGIF. That is a pullback. That is where a good setup is seen. That is a good week. Okay, so even the weekly is divided by count of four, and even if you go to the daily on a daily basis, so you can see. I will go through it. I'll just explain it to you. So if you can see here, this is the week November 4th. So this was the previous week. So if you see here at 18 hour Okay, I think all the drawings are coming up. So if you see eight, I'll just highlight this. Okay, if you can see this 18 hour, so this will be the start. This will be the new day opening app. This is where the new day opening app is created, or on if it's Monday, the new week opening app is created. So we'll just mark one day and we'll subdivide it. Okay. Okay. So if you look at this, you can see from 18 till 12 midnight, 12. So this basically is the Asian session, right? So this is one quarter. This is Q1. Okay. So this is Q1. So basically, it's the start of 18 hour till midnight open. Okay. So then comes Q2. Q2 will be from midnight New York open till 6. So this will be Q2. Okay. Then comes Q3. Q3 will be till afternoon lunch. Okay, New York lunch. So this is going to be Q3. Then you got Q4, which is from New York lunch the open till the next open. So that is how it is, how Daye sees it. And it's really, if you club it with ICT concepts, I'll teach you. It's really, it gives you the edge of every session, how you are supposed to see it. So just we'll go through how to use it. So just make a note of what this is. So Q1, Q2, Q3, this is how the daily is divided. Okay. Now this is the sessions, how an entire day of 24 hours is divided into four quarters. Okay. Now, every quarter will have another subsession of four. Okay. For that, we'll need to go to the 15-minute chart. So, this is the start, right? So, I avoid trading Asia. So you can start with this. You can start with the London. I don't trade London as well. I just stick with the New York session. So New York is good for me. I don't uh, sit for London as well as New York. It'll be around. It'll be hectic. Like you can't sit for 12 hours or two sessions. It'll be difficult for you. So I'll just explain it how to see it. That's all. Okay. Again, if you see here, if this is Q2 is the London, so divide this by 4. So it's what, like 6 hour. So 6 hour, if you divide it, it'll be a 90-minute. Okay. So from 12 till 1:30, that'll be your session 1. I'll just change the color. Okay. Subsessions of each session, each daily session. Okay. So from 1:30 till 3, that will be your Q2. So from 3 till 4:30, that will be your Q3. Okay, so this is the daily, on the daily basis. So here, this is again the subsessions of each session. Okay. Okay. So you can take a look at it here. So this is again the subsessions of each session. Okay. Sometimes it's going to be choppy. Sometimes you have to go to 1 hour, 1 minute or 5 minute time frame to see what you want to trade. So this is how Daye quarterly theory. This is what Daye quarterly theory means. So every session or every day is broken down into four parts. So every quarter. Okay. You can even try to you um, subdivide this Q1 as well inside of a session, but I personally don't do that because that'll be hectic for some people. I find it hectic. I've tried it, but I couldn't sit for that long, so I just stick with the session quarters. Okay, so I don't go deeper after this. Okay, so this is what quarterly theory means. Okay, if you want a deeper knowledge, just go watch his videos. It'll be really helpful. Okay. So according to Daye, so there are four possibilities in a session. Okay. One will be accumulation. So these two are the ones that I've come across over time. So don't consider these two. So you can initially you can don't avoid, but uh, so these two you can initially you can skip it. You can try trading with these two. So these two are something that I've come across over time. So using Daye quarterly theory, how the market responds if it doesn't respond in these two manner. So this is how I've come across. So what you can do is initially we'll start off with this. So here, there are four possibilities, as Dye says. One is accumulation, manipulation, distribution, and then there is continuation or reversal. So A is for accumulation, M is manipulation, distribution is in the opposite direction of the manipulation. So X could be either continuation or reversal. It could either head back higher if it's distributed lower, or it could even chop and continue lower, or it could keep falling. The distribution could continue here as well. It could continue, or most probably it is likely to stay in range if the setup is good. If it's accumulation, manipulation, power of three. Okay, X is going to be a range. It won't move much. We have examples, like I'll show it to you. Okay? So if this is one case, then the second case is if the Q1, if that has a reversal or a continuation from the previous session. Let's say uh, with examples. Okay, I think I can show you here. So if you look at this, one second, let me give you a good example. It will be better. Okay, we'll do one thing. We'll first go look into an example for this. Okay, accumulation, manipulation, distribution, and then X. Okay, so mm, let me go to the yes, because I have drawings here. I don't want to remove. Thank you. Okay, we'll see. The example for this. We need history. Okay. This for blue and yellow line, these are the 4 hour highs and lows. So I'll just go through, I'll just give you a gist of why I have it. So if you see the start of every 4 hour, it's mostly at a session start. So, so the 18, let's say this is the start of the day, right? So this is the start of the day, 18 hour. Okay. So if the day starts here, the one session, so you'll get around two candles to one to 1.5 candle. This will be an Asian session. Okay. Asian session high and low inside this 4 hour. So if you see here, the 2 o'clock, once this 2 o'clock goes below this, you can see it if it breaks below the 4 hour, it's mostly likely to head to the opposite 4 hour targets. So this is how it mostly moves. So 4 hours are really important. It's really reactive. So always make sure, even if you don't have the indicator, make sure the 4 hour highs and lows are marked of every session. Every before session is also good. You don't need all this 4 hour. I keep it because sometimes I feel like if you see here, this is the big range of 4 hour candle. Okay. So all the other 4 hour candles are inside this big range. So if sometimes if I get an entry here with, of course, if the die confirms it on the ICT, I have a few PDRAs. Then I can look, well, see this as liquidity swept, and then we can look for higher targets. So it's good if you have the entire 4 hour mark. Okay. So if you look at this, till 12. Okay. So this is my accumulation. If you can see the previous session. Okay. So this is the session before this. This session is inside that session. So mostly I see this as accumulation. Okay. So it hasn't continued lower, or it hasn't moved higher with good displacement. So it's inside this range. So this is likely to be seen as accumulation. Okay. Then London session starts here. Let's say London session, it starts here till 6 o'clock. If you can see here, this session, sometimes it goes lower, but sometimes it goes higher. But what I would like to see is, I would like to see how the London session ends. So basically, it was a small move to lower. Okay, it's not like it swept this liquidity. If this was swept, then manipulation on the downside could be considered. But here, if you can see, the day high was swept at the open, and then again the New York opened and it started more low, moving lower. So you had an accumulation. This manipulation never happened, so it started manipulating lower. But we didn't get an entry. We didn't have a setup, so I stayed out. I didn't enter this. I think we Thursday we entered somewhere here. We entered a long, yeah. We entered a long in NQ. It was more of a choppy, so it came and swept this high and it started moving lower. Sometimes it happens, so you can't do much about it. So this was the manipulation for me. If you can see a good displacement, this was not the manipulation. I don't see this as the manipulation. Manipulation is something that the entire session has to run. So if the entire session moves in a way, then I see that has the manipulation. Okay. And then if you can see, New York started moving lower. This was the PM session. Then this was the close. This is where the market actually closed. So accumulation, it moved higher, manipulation, then started moving lower. Moreover, You need to come down. You can't just start off with the weekly. You need to, sorry, you can't just go on with the session or the daily. You need to come as per the entire week. We'll go through it now. So I think it's better I take you guys through the entire weekly objective, how I personally see it. So we'll turn this off temporarily. And here, I personally don't like London session. I don't trade it, so I'll just turn it off. I want to show how I personally see the chart, so let's skip that. So, okay, this was the start of this week, right? So if you see the start and the close, it was almost on the same line. So I consider that as accumulation. Okay, this was an accumulation for me. If you can see, this is where the week started, the new week opening up, and the market somewhere close to the new week opening up. So this entire thing was a accumulation. You need to write it down later. So what I personally do is, I'll show you another this thing. So I like to take it down. Take down has session. I just mark it on a book. So END is the ES, NQ, and the dollar index. Okay. Then there is sessions. Asian, London, AM, PM. Then this is when the session AM session is again divided into four quadrants. So this is the AM session of the New York Open. So London I don't trade, so I avoid it. So just write down what the entire London session did. I don't break it down like for how I do it for New York. So accumulation. So let me I think it's better we go to the chart of the table. Okay, that's okay. We'll do it here. So this was the entire Monday session. Let's see. Okay. Monday session. That is why Monday usually you don't trade, because you won't have an idea of what the market is trying to do. So since it was in a range, if you see here, okay, I think I'll just mark it with parallel lines. Okay. So if you see, this was the start. So this was the accumulation. Okay. The Asian session was accumulation. Okay. So once that happened, London session started. London session was a manipulation, right? It manipulated on the higher end, and it also took out the previous day high. That was the Friday high. Okay. This high was swept. Okay. This was a liquidity point that the price swept at the London. Okay, along with the Asian session high. So if you can see this Q1, this was the, I told you, right? There are other two, like if you see this X, XX, manipulation and distribution. So basically what it means is, if the price, if the first session, like let's say, if anyway the X is something that has already been taught by Day. If the Q1 is a continuation or a reversal of the previous session, second is supposed to be an accumulation as per Day. But sometimes what happens is, it doesn't accumulate, it reverses, you know, like how it did here. If you can see, the Q2 just reversed immediately. This is not, you can't call this accumulation. It reversed. So what we do is, this is X moving to a higher end. So what you can do is, this is X, Q1. Q1 of the New York AM session is X. Then Q2 is another X, which is moved in the opposite direction of the Q1. Okay, it swept. It tried to take out the low, right? Manipulation happened. Manipulation did happen here. It tried to take out the low, including the day low. Okay, you can see here the Q3 was a manipulation. Okay, see, it went, swept the low, day low. I'll tell you what entry points you should see to enter here. Okay, till then you need to wait. Okay, I'm just explaining you the what do you call acronyms or how to see the session breakdown. Okay, so X manipulation in the third quarter. Then now I'm supposedly be looking for a distribution higher. Okay, Q1 Q4 is supposed to be distributing higher. Okay, if you see here X, then it took out the low. So this is only valid when the low of the Q1 is swept. If you can see, since it's Monday, you don't trade till 10 o'clock or 9:45. At least a minimum of 9:45 you need to wait every Monday. So because the market would be closed for two consecutive days, and Monday you are supposed to, I suggest you wait till 10 o'clock, 10 at least 9:45. Okay. So let's say you had an Q1, you had X pushing higher, then Q2 you had X pushing lower, and at Q3 it manipulated. It took out the London session low. Okay, London session low was swept at this one. Okay, now what we are supposed to look at is you need to go in. I personally stay in 5 minute chart. Okay, so what I do is every time I want to look for a, so as per Daye, we are supposed to distribute higher, right? So manipulation happened. You're supposed to look for longs. Okay. So if you're supposed to look for longs, what I personally do is I wait for a bearish down pin bar candles. Okay, in 5 minutes, 5, 15, 1 hour, any of this. Okay, no, nothing below five. Okay, I personally like to wait for a 5 minute pin bar candles. Okay, so let's say this spin bar was formed at 10:10. Okay, it swept the low. The spin bar was formed, then it again swept the low. The 4 hour low here was again swept. So if you put the 4 hour, you'll see this. Okay, if you see this one, this is where the last low. Then again it swept lower. Okay, so you need to mark the high of this candle. Okay, high of this candle. Now you need to go for once you see this candle like a pin bar. This is for longs, I'm saying. If it's for longs, you need to see a bearish pin bar candle, like what hammer do. I don't know what you call it. Okay, just make sure that candle is seen. Okay. Now once you see that, you need to wait. We need to wait for the candle to close above this. Okay. More, it'll be even better if you have a FVG, or you see, if you go into a 2 minute chart, you need to go into multiple time frames once you see the after seeing the pin bar to see a FEG. Okay, I see FEG in 2 minute. I see FEG in 1 minute. Okay, you need three barricades. Any three, three. It's better. Okay, if you have a three barricade setup, it's better. Okay. If you can look at this is the consecutive three down candles. I'll mark all the three things that I've seen. Okay. So this is the auto block. Okay. That I see in the 3 minute chart. Then I also see this is higher. I see a FEG here. Okay. Apart from that, I also see a breaker. The last up close candle before the down move. Low, high, lower low. Then break of that high. So this is the breaker. If you go into the 1 minute chart, if you go into the 1 minute chart, you can see this two consecutive candles. Okay. The last highest up close candle before the down move. Mark those. Long position. Just make sure. So I would have entered once this candle closes. So let's say this one, right? So it closed. We had an FVG here. If you can look at this, we had this FVG right here. So we had this FVG. So I personally, what I would have done is, I would have entered as soon as this closed above, and once it retraced here, I would have entered. I'll show you my trades as well. I didn't take trade on Monday, but I took a trade on Tuesday, Wednesday, even Thursday and Friday. All of them were based on the same setup. I'll show it to you. So I would have entered here. My SL I would have kept it this low. I don't keep it to the low. This will fuck up my risk management. What I would do is I'd look for the lowest low, down close candle in the 1 minute. So this is the lowest down close candle. I'd keep it here. So once this enters, start taking partial. You had this big FEG. So you just have to close it here, somewhere here. Don't close it. They start taking partial. I usually target 1.5. That is where I take 50% off. And I'm more to break even. Then yes, my SL would have hit. Trailing SL would have hit. Okay. So this is what I would see, and I would compare it. So I just don't enter right of NQ ES. I would compare it with NQ as well. What NQ had. So let's see what NQ. Well, if NQ had the same kind of setup or something. Okay. If you look at this, NQ almost had the same, and we also had SMT here with ES, right? But NQ, I wouldn't have entered NQ because NQ was weak that day. So if you see, this was kind of holding it, but NQ dumped more than ES. So NQ dumped almost 59% from the same point. This like around 17, 0.7, 0.17. Yeah. Okay. Definitely this was stronger. Also, you need to make a look. Keep an eye on the higher time frame as well. If you can look at this, we had this highest up close candle. Or if you go to 15 minutes, you can see a breaker here. So last down close candle. If you go to 5 minutes, you'll see a perfect 3 candle breaker. Definitely. See? I know you could have easily I would have targeted this because this is a good 2 hour. That is the 9:30 open. I would have definitely targeted here with this setup. Yeah, anyway, 1.5 I would have taken out partial. Then again some at this one. Okay, if you see this 5 down close candle. The price never closed above that. Took fall from there. But I don't know, I don't trade this setup, so I don't know how to enter there or something. So I personally avoid that. Okay. But the one thing you always need to make sure before entering such setup is you need to confirm it with Daye. If Daye theory gives you a okay, good to enter move, only then you enter such trades, or else you don't enter. You need to first confirm it from the Daye concept. Then you need to start looking at the ICT concepts. That is the 3 barrier PD areas or anything that suits your this thing. And Monday, it's mostly going to remain chop. So yeah. And I personally don't trade the PM session because since most PM sessions are difficult, or it's supposedly going to remain in a range. If you see here, X manipulation, distribution. See, it didn't distribute much. It almost went into a range. Okay, but if you see Q1, this one was a fall. So this is X here for me. This is an X. This Q1 of PM session is an X. Then we had accumulation in Q2. then we can't do the manipulation here because by half of Q3 the market closes. Okay, so you can't do a proper uh, what do you call a die analysis for the PM session if the Q1 is a fall. If the Q1 is in a range, then yes, you can. I think Friday we had that, so I'll share it with you. Okay, so this is for Monday. So after seeing this, I didn't trade the Monday. I'm just showing what I would have traded if I was there. So this is this. So Monday was accumulation. Okay, to leave it that way. Then once you come to Tuesday, let's say Tuesday, this is the start. So the Tuesday starts here. This is the high. Go on till so this. If you see here, this is the Q1, or that is basically the Asian session. Okay, so it's in a range. It's in a range compared to the previous. This entire downfall, this entire range is inside this big downfall. Okay, so I see this as a accumulation. Okay, then if you see this manipulation on the downside, right? I know this is all what do you call the market has already moved. I know you guys could say that, but you can join the live sessions. I'll be trading live. So okay, so if you can see this, London actually manipulated the low. Okay, this low, yesterday's low, pre PDL was manipulated in London. So what do? You generally look for a long setup, right? You generally look for a long setup. So what I did was you had this equalize. Okay, you had this equalize, and this was not like a big liquidity sweep. Liquidity sweep doesn't mean it just sticks. Okay, it could be this could be equal lows again, relative equal lows. Okay, so the sweep must happen only when something like this happens. Like it should close like really good. Okay, so it had an accumulation. Let's see if I actually traded something on Tuesday. Give me 2 minutes. I'll just check my trade over it and I'll show it to you. I'll just open my TradeOver account. I'll just, give me 2 minutes. I'll just log in into my TradeOver and I'll just put it on the screen. I think I've taken this trade. I've shorted the market here till this low, I guess. I'll show it to you. Let me see what I can see it on my phone. I'll just show it. I'll just put it on the screen. So, oh yeah, so if you look at this, this is where I have entered the trade. So if you can see, this is on Tuesday, 12 November 24. So I sell at a limit price of 60 27 25. Okay, I sell five contracts 60 27 25, and the time stamp says it was at around 9:08. 9:08. If you put it, this is in Indian Standard Time. So if you put that in US perspective, I think 9 o'clock is somewhere around 10:15 or something. Yeah, yeah, 9 o'clock is somewhere around that much. 10:15. I'm not sure. Let me just check. So it shows 9 p.m. 9 p.m. is around 10:30. Okay, 9 p.m. is somewhere around 10:30. Okay, so let's go back to the. So if you see, so this is where I sold it. Okay, why I sold it at this day? Why I waited for this quarter is, so if you can see, we had this relative equal highs, and we had this lows here that was supposed to be the target. Okay, this was the day high. This was the day low. We had an accumulation Q1 here. Q2 had the manipulation, accumulation, manipulation. Then again we had like another push higher. Okay, you can see here. I mean I could have traded this as well. Accumulation, manipulation. I didn't see anything till the 8:30. If you see 8:30, I think we had the news. 10 o'clock we had some Fed talk. 10. So we didn't trade anything till then. So this was the last down close candle. So if I'm looking for a short, I need to look for a bullish pin bar, right? So if you look at this is a bullish pin bar, but it didn't close here. If you go to the 1 minute chart, it would have never closed, right? The price never closed below that. Okay, so you need to still wait. You need to have patience when you're trading the setup, okay? Because many times you can see bullish pin bars, but you can't trade. Okay, then what happened? It took the high, it manipulated. See this two consecutive candles, two candles, and this continuous three down close candles. This is the breakers. We had an FVG, we have an order block. So we have three barricades. So one is this order block, last up close candle. Then we have this breaker and consecutive four down close candle, the last down close candle before the up move. So high, low, higher high, then lower low. Okay, this is the breaker. Then we have an FVG. Okay, accumulation, manipulation. So distribution, it's supposed to start the distribution here. The manipulation happened later. It's not like it's going to be like textbook where Q1, if it says manipulation, it has to happen at Q1. Okay, sometimes it does happen at Q3, but you can see the down move. Okay, it falls. So I initially waited till here because this looked like a continue. If let's say the price is trading here, okay, 9:30 open happened, the price is here. This is initially an order block, right? Last continuous down close candles and the price is above. Price takes support here, but then it couldn't hold it, and the 10 o'clock we had a Fed speak, so it closed below this. You can see the price closed below this last down close candle. If you're asking how is it a down close candle, go to the 15 minute. See this bullish pin bar. How nice it's a bullish pin bar. You can keep it here. Okay, you had this order block. The price closed below this with an FVG, of course. If you go to 1 minute or 3 minute, you'll have I think you'll have FVGs, more FVGs. Yeah. Once this closed, I looked into this FVG. this 3 minute FEG have you had? So I think I waited till here 10:30 because I wanted to trade at the start of the session, or I think I sat down late. I was out somewhere, so as soon as I saw the setup, short. So 1 second. I, so it was at 60, 27, 25, right? 60, 27, 25. Okay. So 60, 27, 25 is okay. My entry was this, and it was entered somewhere at 10:30, post 10:30. Okay. And I think I would have kept my stop loss somewhere at this. I wouldn't keep it at the all high. Somewhere at this close of this candle, I would have kept it. Okay. Let's see where I've. Not sure. So we had a buy stop at 35.25. Buy stop at 35.25. Okay. Yeah. I think I kept my sell here 35.25. Okay. So and we targeted. So we had a good 1 hour, I guess. Let's see where we closed it. So and we bought everything got filled at 1550. 60, 60, 1550. 60, 1550. So it was a good 1.5 hour. Okay. It was a good. I could have kept it on. If I had kept it, it would have been a good 2 hour. No, I think there might be a reason for me to close it. I'm not able to recall it. So 50-50, it was a good 1.5. Okay. So see how beautiful it goes and it stops. Okay. This is how like quarterly theory works. Like quarterly theory works. So main thing is the time, and you need to look for the down close candle. That is what I personally look for. If you have some other PDRs, you can see. I looked into this 15-minute candle. It was a good bullish pin bar, and any candle goes below this with an FVG or three PDRs to keep my SL above, immediate short. Okay, and you can target it this low. So it was a good tour, easy tour. In fact, it even fell further, but I don't keep the trades post a 4 hour low as well, or post AM session. I don't want to keep my trade at the start of PM session. So this was that. Okay. So if you can see, the price went even lower, and we had a okay. We had a PO3 here, power of three, accumulation, manipulation, distribution, right? AM session. Okay, and Q4, if you look at this Q1, this Q1, I call this accumulation. If you look at this, you might say, well, no, it went lower. Yeah, you might say it went lower. Like, let's say it swept the low, swept this low. You can call this manipulation or X or something. I personally call it, accumulation because the start and then it almost retraced back. So I see this as accumulation. See, most of the things that I'm saying is based on what I've seen so far. We're using Daye. I could be wrong, so you might be analyzing something else. So this is not a proper Daye. I can say that. Okay. Then if you see this as accumulation, you can see the price did move higher, manipulate. What did it manipulate? It had highs here, or maybe in the what do you call? In NQ, it might have had an entry. So okay, I think it took out the liquidity somewhere. I think I don't know. There's no good liquidity I see here. Maybe the session. Okay, but let's say if this is the manipulation, it took the high, and we'll have anyway have the what do you call new week star. Every session will have a true opening range. Sorry, what do you call this? True New York Open or True New York PM session open. So that will be at the start of Q2. Okay. So if you see here, I don't think so. I would have traded this. I'm just saying like how it would easily work. So let's say it had come up. We don't see. This is the first candle with a down close, bullish pin bar candle. Okay. So we wait. If it sweeps below, it doesn't. It pushes higher. Then the next down close candle is formed here. Sorry, the bullish candle. This one. So we wait again to see if the price does push below that. No, it again pushes higher. So this down close candle, we still keep in touch with it. So we want the candle close below that with a good FVG and a breaker. We go to low. We'll start going shifting lower. This is not something I would have traded. I didn't even trade. I don't trade the PM session. So I'm just saying how the quarterly theory works. Okay. So personally, I don't see any what do you call PDRAs that you can that I can see off the chart. So definitely, I wouldn't have traded this. But see, if you did trade, maybe 3 minute can have a breaker or something. We definitely have an FVG. So no, 3 minutes was even more choppy, right? 3 minutes was even more choppy. So I think 2 minutes had the best view for the entry point. So we had this. This was the down close candle. We had this two consecutive down close candle. We had a sweep above, close above this. Okay, then the price did tap, will fall below with a good FEG. I think we had an FEG right at the 1 minute. Yeah. I immediately shift to 1 minute once I'm seeing this. So this would have been my entry if at all I wanted to, if at all I had entered. This big down close candle is the breaker block. We had a push up, high, low, higher high. Then we had this the in the 5 minute, if you can see, this was the bullish pin bar. So close below that, we have an FVG with the close. Keep your entry, enter right at the close or right at this one. Keep your SL with the highest up close candle. If you don't see a target, what I initially do is I initially target for the true New York Open. Okay, but since it's a PM session, it won't be that easy. Or maybe you have a FVGs in 15 minutes to target. Okay, you have this FVG points. I think it's there in the 1 hour as well. Yeah, so you have this 1 hour FVG as well. And moreover, you can't keep it post 4 o'clock, so you can't hold the trade till tomorrow. If you can see, if you had held it, you can see how it reacted out off of the true New York Open of this. Okay, the price did come till here. Okay, the true New York Open or the true session opens are important. You can easily, target 2 hour and then close it. Anyway, it has to move till 2 hour. So 1.5 hour, you take partial 50%. 2 hour, you close the rest. You're done for the day. I wouldn't have traded. I'm just seeing how the die works. Okay. So if with this you can conclude that Q sorry you had mm, we had a manipulation lower. So I would say it's a manipulation lower. Triggered the lower as well. Mm-hmm. It triggered the lower as well. So I would say this accumulation manipulation lower. So I would look for a long setups here on Wednesday. Okay. Let's see how Wednesday went. So Wednesday, anyway, Asian session. Wednesday we had CPI. So not a great day to punch orders. So let's just analyze how it went. So this was the start. This was the Asian session, and the London session was again an accumulation because if you see the open and the close of London session was somewhat similar. So I see that as accumulation again, and we have this relative equal highs that the London session has left. Okay, this relative equal highs. Then Asian session starts. We had this accumulation. I think we took a trade in NQ, not an ES. We took a trade in NQ. I'm sure I remember taking a trade. 13th, right? NQ. Yeah, we took a trade in NQ. Well, I'll show it. I'll show it to you how it was. It was traded live as well, so you can go check out the November 13th video. CPI day. Yeah. So if you see here, we had an accumulation. Q1 was accumulation. Q2, 8:30 open, it manipulated higher, right? It manipulated higher. Okay. If you can see with the 4 hour, I'll just keep the 4 hour on the 4 hour. What do you 4 hour indicator on the NQ? If you can see, I think the histories are of okay. If you can see, we had the same accumulation in NQ and accumulation in London as well for same as ES. Okay, this range was inside this big displacement. Okay, so we see this as accumulation. If you can see this CPI thing, it took out the high. This high was taken out. This entire range was broken. Okay, and it was in the manipulation cycle, right? Accumulation, manipulation. What comes next after the accumulation? It's distribution, manipulation, distribution. So what I did, I didn't see a good what do you call bullish candle, right? This is not a bullish close candle, and I don't trade off the FVGs or something like this. I've lost confidence in all that. So what I did, I know the 4 hour is swept. I know the next 4 hour target is lower. This liquidity is there, and we have this one. I didn't hold it till here, I'm sure. I remember because it was a CPI day and I didn't want to hold it longer. And if you can see, if I had kept my target at the day low, at the PDL, it didn't hit. It you know tick. It stopped at one handle or something, one handle or two ticks. Okay. So what I did was in the 5 minute, I looked at this big candle, right? This bullish candle. Okay. I kept my eyes on that, and I shifted my chart to 15 minutes to see if I have something there. If you can see, this was found. I think I had entered before that only. I had entered somewhere before the before this candle was formed. Right. So I just looked into the 5 minute chart, and it was a 50% gamble, but I had my setup here, and this was also traded live. I saw this last up close candle, which is likely to act as an auto block. Okay. I kept this low. I waited for a candle close below that. Okay. If you can see, I never entered even here. I didn't enter my trade even at this break. Okay, I'll show you the time at what time I entered. So my entry was 21 148, 5 quantity, and the time was 8:10. So 8:10 is what? So 8:10 is 9:40. 9:40 was my entry, right? Correct. 8:10 is the 8 is the New York Open. So 10 minutes after that is 9:40 something. 9:40, 9:45. Okay. It was 21 148. So if you see here, we have 21 148. Yeah. So 9:40. So waited for this candle close. I waited for this candle close. I had this order block and I had this big FVG that got violated. If you can see, and this FVG even got violated on the 5 minute as well. I'll show it. I think it's 5 minute or 1 minute. I'm not sure. Yeah, 5 minute. So this FVG, 5 minute FVG, which was a bullish FVG, got violated here, and I had an order block here, and I also had a confirmation that this was a bullish close candle. So this is likely supposed to be the mitigation block. So high, low, it didn't break the high. If it had broken and then come down, it would have been a breaker, but it didn't. So this is what I consider as a mitigation. Let's go to the lower chart and see if we have consecutive candles. So if you see this, this was a beautiful mitigation block. This one, I would see this as a mitigation block. High, low, lower high, and we had this bullish, the move. Took help of this. You can take any. I think I combined this with the order block, so I couldn't keep this entire thing, so I just refined it with this order block. Okay, and I kept my SL somewhere here, 198. This was a very bad risk to reward. I can say that. Uh, I had my stop at 145. Yeah, I think the stop was from later at the break even. So I definitely kept my SL somewhere at this side. Yeah, about this, somewhere at this side. Okay. So what happened later was I saw this relative equal lows. Okay. So my first target was this one. This is where I took my first. If you can see, it's 112 handles was swept at 1150. Two handles at 1113, and yeah. So two handles was swept at 1113. 1113, yeah, somewhere here. Okay, it was almost a 1 hour, so I just took my SL there. Sorry, took my trade there. Then I think I would have moved it to break even, not break even, somewhere here about this. Yeah. Then the second was at 103. That is somewhere here. Okay. Another 10 handles. I took out two more trades. Okay. Then I think 1 hour I left it somewhere. It chopped around, so I had to eventually close it at 116 or something. I had to close it somewhere. So I had three confirmations. I had this order block. I had taken this trade live. You can go check it. So once I entered here, the price rushed back to this order block. I just kept my confidence because of this 3 PDR thing that I follow. So at 1 minute, I was looking at this inversion FEG. So it closed here. So it needs to invert. Okay, 5 minutes inversion FEG. And once at let's I think what time. So one then we had this another big you know we had another 15 minute FE, 15-minute bullish candle. So once the price broke below that, I went even short. Oh, I think that is where I went short. Okay, I entered a bit early. That's all. Nothing much. So when I entered at 9:40, that is when the candle closed and it gave us a big bullish break. So once this low was taken out, I kept it at this high. Yeah, I remember. Then this was swept. Once my first target was hit, it moved to break even. The second one was this target. I didn't keep it all the way till here because I don't know, I didn't have the confidence because of CPI. So after that, yeah, Q4 just consolidated. Q1 had a move up. I think Q1 we I think I saw a trade in this one AM session. I think I was just looking at the charts. So if you look at here for the PM session, I'm seeing quarterly theory as per quarterly theory. So you had this accumulation, right? You have this accumulation. So this is kind of like accumulation and an X. So if you see this, the previous one, I wouldn't trade this. I'm just saying, okay. You had this large down close candle. I could have entered here as well, but if you see this two down close candle, it is not a good entry point. So I would wait for this candle close. If you see this is the Wednesday PM session, right? So we had a close above this. I think we had a close in 4 hour chart. Everything got swept there, right? So we had this down close candle. So I just marked the low or the close of this candle. Sorry, I think this one is what I marked. So immediate another push down. Okay. I don't trade, but yeah. So as soon as the price broke below this, you could have. It was a bad risk to reward because you can't keep the trade till the open. So, and it was somewhat in range. So I personally hate it. So yeah, this is some PM session quarterly theory trade that you could have taken, or you have an SMT here as well. If you can see, this high was never taken, so we have the small little SMT here, right? So any break below this with an FEG target lower, that's all. So again, if you want me to repeat, one is make sure you keep an eye on the sessions, that is the quarterly sessions. You can take a screenshot of this accumulation, manipulation, distribution. Just follow this with each quarter, okay? And if this falls in, if everything is okay with the Daye, then you shift to the ICT concept. So basically, what I do is I look for a bullish candle, a break below that with an FEG or a breaker and an order block. I make sure I have three barricades or the PDRs. So let's say if I want to go short here, so I need to make sure I have an order block. So I do have an order block. Okay. Then I make sure I have a breaker. So you have this consecutive up down close candles, which is going to act as a breaker. Okay. Then you have an FEG. So make sure you have at least three. Three is good. Even two, if you have, if you think the market has to at lower, then well and good, you can enter that with small risk. So yeah, this is how I personally trade. Okay. So I think this is enough for today. We'll have another session tomorrow, or we'll do anyway. We have the market analysis to do, so we'll have a chat on that day as well. Okay. All right then.